So build, connect, innovate. That's another one. So remember, that's what we're really after today. Build, connect, and innovate. And really excited to introduce the next panel. And it's about partnerships. And it's about how we win together in the marketplace. You saw the last things about partnerships, technology, and this is a real representation. We have like an all-star panel. Bryan from US Bank is going to lead it off and be the moderator. Gil from Microsoft, Gunita from Bottomline Technologies, and Jeff from Kyriba are going to talk how they work with US Bank to really integrate and embed their payments inside the ecosystem. Why is that important? What we talked about before. Digital innovation, meeting our customers where they are from a technology perspective. Whether you're doing merchant processing we were talking about, whether we do an AP automation, payables, receivables. So with that, Bryan, appreciate it.
Yeah, I think Peter is our enterprise head.
Oh yeah, I never introduced myself. So somebody said, yeah, I'm sorry. I thought everyone knew me. I'm so, how bad of me, sorry. I run emerging payments for US Bank, so really responsible for these strategies, driving them forward across both Elavon and US Bank. So sorry I didn't introduce myself. I assumed everyone knew me, but please introduce yourself if I haven't met you. And thanks. Bryan, take it away.
Awesome. Thank you, Peter. Nice to see you all. Bryan Schneider, I'm the Group Product Head for FinTech Strategy and Partnerships at US Bank. Been with the bank about 2.5 years now, and I've spent the better part of 20 years in FinTech before FinTech was FinTech, and financial services, global cash management to be specific. So I see some familiar faces. Some of you have told me now you have kids or grandkids, so been in the industry long enough to see a lot of familiar faces, so good to be here with you in person. So we've got a great, I don't know if that's on my end, sorry about the feedback.
Is that mic to mic or something?
So got a little feedback. So great lineup today, and actually before we dive in, I just want to do a quick poll, and then we'll have introductions and give you a little bit more view into what we're going to be talking about here. So I want to hear from you all. If we could just have a raise of hands for folks here from a financial institution. That would be great.
Come on.
Thank you. Yep, that's a good number in the crowd. And then how about from software or fintech companies?
Nice.
Great mix. So it's almost half and half. So perfect group. I would also ask who else still waiting for their coffee to kick in. Yep, a few of those out there. Okay, well, we'll try to keep this lively. So I'd love to start with some introductions here. We'll go right to left, and Gil, kick things off here.
Sure, thanks everybody. How close do I have to be? Is that working? So I'm Gil Brodnitz, Chief Technology Officer for Financial Services in the US for Microsoft, and part of our industry team, which really works with clients, with banks, with fintechs, and also with partners to kind of improve the discussion about business outcomes, business solutions, kind of connecting the dots. I kind of joke that we're really good at selling hammers and nails and screwdrivers, tools, and we need to get better at selling bathrooms and kitchens, and that's kind of my job. So bathroom and kitchens guy. Background mostly in digital strategy consulting and some entrepreneurial things, startups along the way, as well as line management of big transformation at Capital One, so I've kind of been on both sides of the table. And I guess a fun fact about me, I have a handful of, a selection, let's say, of guitars behind me in my office, and if the meeting gets really boring and I go off camera, I'm probably practicing scales.
Nice.
Awesome, thank you. Gunita, please.
Hello, everyone. Good morning. So looks like the party people are here this morning. Gunita, Bindra. I'm with Bottomline, and I represent a product called PayModex, which is the AP automation product within Bottomline. I am VP of Product Management and oversee technology partnerships as well. I have been with Bottomline for, let's say, over 2.5 years, and prior to that with another fintech, so a payment nerd right in front of you. So, oh wait, Bryan asked us to talk about a fun fact about myself. So, the thing is that I have a 5-year-old and who's into pretend play. He started a cleaning service, believe it or not. And I am the lead cleaner, and I got recently promoted. So that's my fun fact.
Awesome. Thank you, Gunita.
That is a tough act to follow. Kind of just reversing it a little bit, I'm on the other end of it, and I'll start with a fun fact and kind of re-engineer the intro a little bit, because I'm a former consultant, and that's what I sort of do.
A little closer, to the mic.
closer.
Oh, I'm sorry, yeah, but my children are on a little bit of a different career arc. They're out of the house, they've been launched, they finished college, and of course my wife and I were sitting around thinking, God, we're a little bit bored. What should we do? Call it bad birth control. We got an Italian hunting dog. We live in an urban area and we don't hunt, so that dog, Romy, is now occupying most of our time, and it's been a lot of fun. But getting back to, me a little bit, and not my dog and my family. So I've been with Kyriba about 2 years. I've had a little bit of a different career arc in that I've bounced a little bit. I've been a partner with 2 of the big fours, KPMG as well as Ernst & Young. I actually left KPMG to join a company called Wall Street Systems, where I basically ran kind of global sales and services out of the US. We sold that business, and eventually I wound up at EY as a client partner and left EY about 2 years ago to join Kyriba as SVP of Global Banking. And what does that really mean? If you know anything about Kyriba, basically we sell directly to corporates. We have about 2,700 corporates around the world, around liquidity and FX risk and payments and you name it. But actually, we kind of work through and with banks. So banks really effectively are a channel for us. And that does a couple things. It gives us, a lot of connectivity to the banks, but it also gives us scale in the marketplace. So thanks, Brian.
Yeah, thank you, Jeff. So we got a good powerhouse here. So we're going to cover a couple key areas. So the first of which we wanted to check in with the panel to ask them how they're bringing in newer ideas and working with their clients in the marketplace to bring ideas into their organizations and then to integrate that into their product offerings through potentially agile processes and others. So we'll start there, and then we're quickly going to transition really focused around partnerships. So Gunita, I'll actually tee things off with you. So in your experience, how is Bottomline listening to your clients and your partners, and also how is that input coming into the organization and evolving into client needs, specifically around things like embedded payments or embedded finance?
Right, great question, Brian. So firstly, as my team and myself, we oversee product management. Big part of our lives is really understanding what is it that the market and the customer is looking for. And we have customer forums. We work very closely with our bank partners like US Bank to really get feedback from them. And then, of course, working with the sales team, understanding what's happening on the field, right? One of the things we've started to notice is the impacts of the macro environment. So I know this word is going to come up a lot, but what this means to us is that we're seeing that our market and customers are looking for automation. So they're looking for solutions that will reduce cost and save them time. Our market is, dealing with great resignation, lean teams wanting automation, embedded finance, looking for one-stop shop to manage their CFO office. So that's a big thing that we're seeing in the market. Last, I think supply chain disruption, right? Top of mind for all of us payment nerds here. What we hear, I was with actually a non-for-profit prospect that's launching an RFP. And that person told me, Gunita, I am looking for not just the best AP automation solution, but I'm actually looking for a solution that's going to give me employee satisfaction, that's going to help me improve my relationships with my suppliers. That all tells us that embedded finance, integrated offerings, employee satisfaction along with customer satisfaction is really key and top of mind.
Great. Thank you, Gunita. Gil, you're next. We've talked a good bit about this. I'd love to get your perspective, especially even from a regulatory perspective, how some of that's impacting.
Well, I think listening, listening. I think that's the game. But it's not just, I guess first of all, I'd say we invest in a lot of people like myself to kind of help our account execs do a better job of listening, in context of industry and what's going on, trends and culture and regulatory environment and everything. For years we've been very good at building specialist sales teams, but adding to that more of this sort of industry insight to complement that and to sort of meet the client where they are, I think has been really important. But it's not just a matter of listening and it's like seeking understanding, because I think when you think about when we think about partnering with our banks, our bank clients, we almost never go to a bank client without a systems integrator or one or more independent software vendor partners as well. It's often an ecosystem play. And everyone kind of needs to understand, where the value is for the client, where the value is for each of the players, and how to make all of that work, without, some sort of friction or competition or dysfunctionality. So I think everyone kind of really looking to understand at a deeper level what makes this work for you and for them together, so that we can all deliver value for the client is really important.
Awesome. Thanks, Gil. And Jeff, we've talked about inflation, macroeconomic headwinds, if you will. Love to get your perspective on how you're working with clients and how those trends are impacting them, and then how you're incorporating that into your products and services.
Yeah. So I think I look at that, and this is sort of the consultant in me from the perspective of the CFO. And obviously, with inflation, you're doing things like you're significantly increasing the cost of FX hedging, as an example. Or, you're a treasurer and you're basically needing, real-time visibility into your liquidity positions. So what we've seen at a macro level, basically with the central banks and the Fed, taking the initiative to kind of tamp down inflation, they've done that by basically raising interest rates. And that's had a pretty significant impact on our business. Because if you're a CFO, you don't want to ever talk about hedging risk or FX. Basically, if everything could be done in a single currency, life would be really, really good. But if you get on an earnings call and you've taken a significant FX hit, that's going to be really, really significant. So we see that becoming, and we call FX risk, that's becoming much more and more part of the vernacular of how we're going to market. And that sort of really cascades into, kind of riffing on what Gunita was saying, technology as well. Because basically you're accounting for a lot of this in traditional ERP systems, which are great, like Oracle or SAP. However, there's gaps in those product portfolios, especially around FX. And then if you kind of layer in basically machine learning AI, it creates basically a really good opportunity for fintechs like ourselves to kind of create some really, really interesting and innovative solutions that complement the ecosystem, but at the same time really kind of solve real-world problems around interest rates and kind of the macro environment that we've never seen before. And it's been pretty scary, but at the same time I think we've got the tools to deal with it.
Okay.
Yeah, please.
I think building on that, as I think about the relationship between fintechs and banks, in the previous economy that we're sort of transitioning out of before interest rates went up, there was a lot of money, venture capital money available to chase growth, new concepts, innovation. I think we're seeing a very, very quick kind of sea change in that, where the money's getting tighter. The expectation of the firms funding the venture capitalists and so on, funding the fintechs is for a path to profitability and not just to, I think we're talking to two well-established, I'm not sure, I didn't check if you're profitable, but definitely well-established fintechs. But there's an awful lot that have been, have not yet gotten to profitability. And the game changes for them. I think in the past they were able to get away with having a certain amount of arrogance and avoiding regulation, among other things, compared to banks. So doing things that banks couldn't necessarily do. I think of the example of Cash App, which was able to pay rappers to name drop them. I can't imagine U.S. Bank doing that. So they got to be I forget what the number was, 17 million accounts or something like that in a couple of years, basically, by appealing to market segments and marketing strategies that banks couldn't do. Whether they'll continue to get away with that, will the regulators continue to look the other way? I think it kind of depends on, who blows up when. The regulators have a tendency to sort of fight the last war or chase the ambulance. So it may be a little while before they see some of that. But I think there's a lot of risk in buy now, pay later, for example, in the underwriting models that they've been using in a zero interest environment. Now that we're in a higher interest environment, I think we're going to start seeing them have to learn how to do collections and stuff like that. And I think, my long story short, I think they're going to start looking to the banks to do what the banks are good at and try to focus on what they're good at. The buy now, pay later folks are great at bringing in new customers and cross-selling them things and doing a lot of things. They're not probably so great at collections and risk scoring on lending. We'll see about that. But when some of them start to blow up, I think some of them will either be bought by banks or will partner with banks in a different way. And we'll see a new level of collaboration, and maybe, I hope the banks will not run from it, but will actually see the opportunity and maybe buy some of them cheap and, or partner with them on better terms than they got before. So I think we'll see a lot of interesting new kinds of deals happening in the next, several months.
Great. Thank you, Gil. Great transition. Gunita, perhaps you could share a bit more with us in terms of what Bottomline's doing with banks in particular in the market, and then how you're working together to bring integrated solutions and what some of those success factors might be for folks here in the audience.
So Bottomline, I would say for Bottomline, our strongest go-to-market channel is through banks. So thank you to all the bank partners. We do get a lot of customer reach through our bank channel partners. So thank you, US Bank, for even having us here today. But talking about what are the key success criteria of making that partnership really successful is, I think the key word, I think everything is centered around integration. So let's start with a truly integrated branding experience. So making sure that if US Bank is launching AP Optimizer, it's powered by Paymodex, and we're talking to the bank's customers like we're part of the bank. So really true integration happening from that perspective. Then integrated products. So we offer AP automation, but we are connected and deeply integrated with the bank's rails, your card rails, your ACH rails, right? So I think that's where, again, integration of product really comes to be. Okay, technology integration is great, but I think it's also the sales team, the culture being integrated together is equally important. So we have dedicated solution consultants really helping the bank teams sell our solution. And last but not the least, I think it's more mushy, but it's actually true, that relationships are absolutely critical in a successful partnership. I think if you don't have a good relationship with the right incentives in place, with the right mindset, with the right drivers at play, I think it's hard to make a partnership at the scale of a bank and a large fintech to come together and successfully drive business.
Great. Thank you, Gunita. Jeff, I'm actually going to jump to you next.
Sure.
Kyriba's been working with banks for forever and a day, over 20 years, right? And curious to hear from you how you're working with banks, be it in terms of white label, almost aligning with the banking as a platform strategy that's more plug and play with banks out there to bring more embedded payment or embedded finance solutions to clients or joint clients in the marketplace.
Yeah, I would say I'm sort of a Kyriba newbie. I've only been here for about 2 years. And my observation is that we sort of came into the banking channel almost organically. As I had mentioned before, our DNA is basically selling liquidity, or actually providing liquidity solutions to 2,700 of the largest corporates and mid-sized corporates around the world. But we couldn't have done that really without close proximity and, really collaboration with all of the major banks. And what we found is that, as banks kind of go through the journey of buying or building or partnering, that sort of created an interesting opportunity for us. So our view on that is that, and I think Gunita and Gil hit on this a little bit as well. Banks, what they do have is scale, and they have intimacy with a lot of clients. We're actually quite good at tech. So whether it's, treasury management, white label, or bank connectivity as a service, another thing that we see a lot is around working capital and trade finance as well. So we basically take all of our solutions and we consciously partner with the bank channel to make sure that we have a stronger kind of go-to-market message, and our clients love it. Actually, they love the fact that we're tightly connected with US Bank, and we're looking to figure out how do we provide real-time payments around, potentially doing claims processing faster, or getting that security deposit on your condo back once you've moved out. So it allows us to really kind of innovate together. But we're coming together really at the point of the client, which is really, really cool, right? Because that gives us scale, and while we're a larger fintech, we certainly aren't at the same size as US Bank as an example. So having 1 + 1 = 3 has really been really powerful. And the more we've kind of gotten into it, the more we realize that this is just a very intriguing and exciting channel that we continue to build on. And so, yeah, I do this job globally, and we have partnerships around the world. No two are the same, right, which makes it really, really fun. But I think spirit of cooperation is great, and we found that working with the banks has been really, really rewarding for us.
Great, thank you. And touching on a great point, and by the way, let's make sure I get it right here, the build, connect, and innovate for Peter. We'll get that one in there one more time. Got your back. That's huge. The ability to help banks out with white labeling, right? It is challenging to bring to market. You look at a multi-trillion-dollar marketplace with FinTech. They've got a lot of specific focus. You all have, over 20 years, been focusing on treasury management systems, and being able to deliver that integrated offering, right? Meeting our joint clients where they are and how they want to connect, right? Within their existing workflows is huge, right? And we've obviously been working with Kyriba and with Bottomline, and also now with Microsoft, and would love to hear your perspective. A lot of us, I know over the past year, I've learned a lot more about the Power Platform and the Marketplace Exchange. Can you give us a little bit more insight into those platforms, and then how you're working with banks to bring integrated offerings to market? Maybe just a quick check-in with everybody here even. How many of you are familiar with Microsoft Power Platform?
Not enough.
Not enough, I'm sure. So maybe we just start with that to give some perspective, and then... Yeah.
Sure. I think the headline on Power is that it's a low-code, no-code application development platform that I think is really going to take the market by storm, particularly helping big banks kind of not just solve end-user computing problems, quickly generating apps that can replace spreadsheets and get them all kind of, in a resilient, backed-up environment and off of desktops and so on once and for all. But more than that, I think providing the kind of the digital spackle to fix all those not straight-through processes that the banks still have that cause a whole cascade of regulatory problems, right? Because there's the cost of the manual labor to connect two pieces of string together every day, but then there's all the sampling and compliance reviews and so on, documentation of that process. When a process is straight through, you can measure it at the beginning and see if the same number of widgets came out on the other end. But when it's broken in the middle with a manual step, now you can't really measure digitally. You can measure pieces of it, you can sample it. It becomes very expensive. And all these checkers of the checkers of the checkers. So anyway, I see great potential in banking in particular around using this platform to solve that kind of problem. Once you build connectors from Power into your legacy systems, which is, if they're kind of name brand ERPs, we've got them already. But if they're core banking systems, an old Hogan system that's been modified or whatever, we can leverage your existing APIs if you've built them already to expose web services, or we can build new ones that'll connect in. But once you're connected to that, you can build apps that are compiled code, performance, ready for the cloud, leverage the whole stack. We've actually adopted it ourselves to the point that the Dynamics CRM platform and ERP platform are completely built in Power today. And you can think of it as the convenience and familiarity of dragging and dropping Visual Basic and PowerPoint and a little bit of Excel macro kind of writing to be able to create full-blown applications. Now, I wouldn't build a real-time trading system with it, but for most of the things that our users need, particularly enhancements to existing systems, it's really powerful. It's also something that we're looking to partner with fintechs and ISVs, independent software vendors, to make it part of their suite of services so that you can extend your product more easily by using the Power Platform. And the model that we're kind of going for is that it won't cost you anything from a licensing perspective. It'll just, the ISV would just have to pay for the Azure consumption that goes with that, because it all runs in the cloud. So you're basically able to build completely cloud-native applications, with point and click. From how that fits into the ecosystem, I think I just described a big piece of that. I think the idea that banks can get to market more quickly by having this kind of a tool. You think of what used to be sort of the time it would take you to do a prototype. Now that prototype is ready to go straight into production, and assuming that you've cleared all the internal controls around the API and everything, you're good to go. From an ISV perspective, when a partner adopts the platform and builds the connectors and sells it with their platform, then their clients have the ability to hook that platform and everything else that they want to much more easily using that tool set. So the ability for the client to customize and extend a software product, is rapidly enhanced. We'll see whether this actually leads to, citizen developers is sort of the ideal out there. I think in banks, that's a little harder to believe, in the short term because of all the concerns about risk and compliance and documentation for regulations, all that stuff. But I think the idea of having teams of IT and business people working more closely together, at a desktop to be able to whip things out quickly, try them out, and of course run them through the right approvals. I think that kind of process we can easily see. And to the point we were debating a little earlier, we certainly see this as a way to increase the capacity of the existing IT organization, either through allowing some amount of user-defined development, or just accelerating the time to market for innovations built by the IT department.
Yep. He's touching on a great point. Gunita, it sounds like you want to chime in on that?
Yeah, I was just going to say that, talking about partnerships and various organizations coming together. So fun fact, Bottomline is a partner of Microsoft. We're listed in your App Exchange portal, and we're embedded within the D365 ERP. So our customers, be it the US Bank customers, enjoy the one-stop shop experience using D365. We're embedded payments and AP embedded within the ERP, which is win-win-win.
Yeah. That tends to be working a lot with our salespeople at US Bank, the crux of the problem with there's less corporates and commercial and SMB clients in here. I saw a lot more banks and fintechs, but certainly the ERP integration is typically where the friction is high, and there's less resources in the company. So the Power Platform, these existing integrations that Bottomline and Kyriba already have and have done hundreds, if not thousands of times, is massive, right? So being able to be that systems integrator plus bring that sort of workflow, digitize, automate, and optimize piece to the puzzle is massive for companies, especially as we saw that through COVID. We saw more companies than ever going from paper manual and struggling and looking out to banks and to fintechs, right, and saying, how can you help us move through this antiquated process and systems more towards automation, and the fact that we have to do less with more. We have less resources to do that. So that's huge.
And there was talk in the earlier session about embedded finance and the payments evolving in that direction. I think it's important to think about that as going from something that's an asynchronous experience for the customer to, as many times as possible, a synchronous experience, meaning you get the whole thing done in one transaction. Think about how many times you hate that process of, I talked to somebody, they said they're going to follow up, and I'm waiting for that email or that approval or whatever it is to come. I have to keep this thing in my head with all the other shopping lists and, sports games for kids, schedules, and God knows what else. And if you could just get it done in the course of that first conversation, it's a huge relief, right? You have a sense of accomplishment. Customers crave that. And so I think we're looking at how do you embed the kind, whether it's in a business transaction like we were talking about with Bottomline, or in a relationship or a transaction between a business and a customer, like the car purchase example. You could be negotiating the whole thing, and then the payments can be approved by the bank who's brought into the conversation. We're looking at using Teams, for example, as a place where a lot of that can be embedded, using apps built in the Power Platform to initiate payments, to initiate loan applications and other applications that can all happen from the customer service rep's point of view on Teams, from the client's perspective on a web interface through Dynamics or something like that. So I think we're going to be looking for more of that kind of innovation, leveraging all this technology.
Great.
Yeah,
Jeff, I'd love for you to chime in.
Yeah, just general thought on that. And I think in the audience we had a really good mix between financial institutions and fintech companies as well, right? So I kind of look at this from the perspective of, more with less IT resources. When you're looking at getting things through the bank to get things done, obviously you're gated by internal IT, but you're also kind of at the mercy of the large integrators as well. Having lived in that world for many years, I know kind of how the game is played a little bit. And these large transformational projects tend to find their way into banks, and you could see the same consultant for 9 years, quite honestly, just billing away. And I think that kind of putting myself in your shoes, and I'm sort of in your shoes, it's a good way to kind of keep everybody honest in that ecosystem, right? Because, if you have the ability to kind of leverage the fintechs and really understand what they do, you basically can kind of unburden your own IT teams, provided you're getting through the right risk and compliance gates and people aren't building 50 million spreadsheets. But at the same time, there's basically, in the toolkit that we've built, you can kind of accelerate a lot of things around bank connectivity as well, working with fintechs as opposed to just kind of offloading that automatically to a systems integrator. So it's just another way to think about this as well.
Great. Thank
Not
you.
that I don't love systems integrators. I do love them.
There's always a place for systems integrators.
But there's always a place for them, right?
Awesome. So I guess for the banks in the audience, what would you say as software fintech companies, what would you say to banks that either they could do better, or what would be some recommendations that you would give to banks so that you better work together to deliver those integrated solutions that, frankly, our joint clients are looking for? Gunita, if you'll tee that up.
Sure.
Yep.
How about some fast, speedy approvals, huh? that will be helpful. I think speed and efficiency, and some of it is not even in control of our counterparts at the bank, because it's regulation, it's compliance, so we get it. But the other piece is having the right incentives in place for the sales organization to resell potentially. I'm speaking from our example. Just having the right incentives in place so that everybody's motivated to sell more, everybody's motivated to delight the customers more, I think is key to success.
Yeah.
Jeff?
Did you want to
please.
go, Gil? Or?
You go ahead.
Yeah. So you have to understand what you're dealing with banks, right, and what you're dealing with fintechs. Fintechs, we're like racehorses bred to just go fast and kind of not even think about obstacles lots of times. And banks just don't operate that way, right? So I think at one point we called this friend or foe. You guys are total friends. But at the same time, what frustrates us is basically the pace of innovation. But what I've seen banks do really well, and I think you guys are kind of onto something here, you have to align talent, speed, and basically incentives, right? If I kind of look at this holistically. So if you have somebody within the bank that truly understands fintechs, they become the evangelist of what you're doing, and they can become basically, the person that you want to partner with and stay very close to, because they're going to help you get things done through the bank, right? I think if I were to kind of, re-engineer banks, if I were king for a day, the one thing I would look at is basically the incentive and tied to, how quickly are you bringing these solutions to market, and how quickly are you deriving customer benefit, top line, bottom line revenue, and even client intimacy. Maybe it's increasing, your deposits, or maybe you're sowing the seeds to basically be able to embed more products. So I would love to see the banks basically kind of put the fintech and incentive piece a little bit more front and center.
Great. Thank you, Jeff. Gil?
Yeah, I'll take a different tack. I think banks have a tendency to feel vulnerable to the fintechs. They're, I think of sort of Gulliver tied down by the Lilliputians. They can't be as nimble as the fintechs, and so they feel vulnerable to them as they think about innovation. It's like, oh, fintech's already gotten that. I think the banks often miss the opportunity to show up as the whole bank and to really use all of their assets to their full advantage and negotiate from a position of strength. One bank I was working with in my prior life as a consultant was thinking about international remittances as a big global bank and how to compete with all the different fintechs that have jumped into that space. And as we went through the conversation, we discovered that meanwhile, on the other side, this was in the retail side of the bank, on the other side of the bank, the institutional business was making a lot of money selling foreign exchange clearing services to these same fintechs. So it was almost like selling weapons to the enemy. It was they were enabling a very successful business that would not work without banks providing the liquidity and the risk and the access to those markets at reasonable cost. All of their scale was going to help what the other guys perceived as competition. So I think the banks thinking about, wait a minute, we're the bank here. And I think this turn in the market that I was talking about, as the banks maybe go into more familiar territory, managing risk in a rising rate environment, and the fintechs go into unfamiliar territory, I think I'm thinking particularly about consumer, B2C kind of fintechs there. But as that happens, I think there's an opportunity for banks to reset that equation, show up with strength, and take advantage of what the fintechs are good at, in terms of speed to market and innovation and technology, use of technology and understanding the customer experience better, but bring the bank to the market as well.
Yep. I know at U.S. Bank and at some of the other large global financial institutions where I've worked, it's been a huge challenge to your point, be nimble, right, with all the regulations and structures that we have to operate within. So having that ecosystem, really a healthy ecosystem, I mean, we all know, right, there's no one ERP system, there's no one AP automation system, there's no one TMS system out there. It's hard to be all things to all companies, right? And so having companies that really dive deep into particular areas is extremely helpful for us. Peter had sent a presentation over to me a while back, and I thought it did a great job summarizing the value of a lot of the software fintech companies. And that comes, one, in the UX, right, in the user experience and the workflows and thinking through those details. If you're a healthcare company, or maybe you're in real estate, right, or insurance, to be able to deliver on all those unique needs is extremely challenging. And then the next piece is the connectivity, right? So you guys do this amazing job at a UX. You're also doing a wonderful job at the connectivity piece, connecting to ERP systems, connecting to point of sale systems, connecting to multiple systems, even as a TMS, as a company needs. So this healthy ecosystem, and I like that co-opetition, right? This healthier way of working together. There's plenty of opportunity out there. I think we all shine better as we work better together to deliver those integrated solutions. And I think our clients love that as well. So let's see, we've got about 7-8 minutes left. I'd like to transition to understanding what each of your companies are doing to make integrating with you easier and integration with banks easier. If you can touch on that for a minute or two. Maybe Gil, and we'll down the line here.
Sure. Well, we're a platform company, so we're by that we mean we're really trying not to compete with folks like the folks at the table next to me, who have very deep expertise in the functional elements of the business that allow them to build financial services specific applications. Occasionally we go into an area where we solve a specific problem for a client, we find other people want to buy it, but generally we're trying very hard not to compete with you, to enable you guys. So I think in that token, making all of our stuff work together well and making it easier to work with all of our stuff is really the game. And I think as we, where we're investing a lot right now, certainly in rolling out awareness of the Power Platform and adoption of the Power Platform, both by the financial institutions and by the the fintechs and software companies that support them. That's a clear priority, because I think that's a great way to make a lot of things work together. We've got a broader vision of something we call Microsoft Cloud for Financial Services, which is really about bringing all of that capability and connectivity to bear with the whole ecosystem. And the idea is really, once you connect to the ecosystem, connect to the platforms, you've connected to the whole ecosystem. So adopting one of the components that works with Power gives you access to the other components that work with Power. And we see a lot of, especially below the top 10 or so banks, a lot of banks struggling to kind of keep up with the arms race of innovation and digital acceleration and so on, and looking more for SaaS solutions. And we want to enable that, basically make that easier for them to plug and play all those components on our platform. So thinking of Teams not just as a video chat channel and a collaboration channel, but as a sort of front end for that same experience with customers, with wealth managers talking to their customers, with customer care people talking to their customers, so that the internal chat and the delegation of people, and then on top of that platform, you can bring all kinds of Power-based apps that you custom develop or buy from the marketplace, and they all work together is sort of the idea.
Yep.
Yeah, so great question, by the way, Brian. I think really speaks to the integration efforts that all of us are making, right? So number one, we're prioritizing integration. And how are we doing it? A third of our development team is focused on what we call openness and connectivity is a roadmap theme. So it's all about building APIs. We already have APIs, but if there's any custom needs that are needed by our customers, we do build to support those needs. We also are building building ERP integrations just to maximize the revenue realization, getting to the customer and their tools faster, I think is a big piece of a priority. And then last, I would say partnerships. So, what happens is you build an ERP integration, it hits implementation team. Well, guess what? The customer has a very customized ERP accounting system. Now, what do? You're stuck in implementation. So that's where we partner with ISVs, system integrators. We love them too. So for them to come in and really bring their ERP expertise to the table and help implement the product. So I think it's an ecosystem of prioritizing internal development, prioritizing partnerships, and then supporting our implementation team.
Jeff, I know you guys have been working a lot on APIs in your marketplace. What sorts of things are you all doing? That would be helpful for
so
the
I think
audience
there's
to hear
the
about?
API play as well. And you guys said it really nicely and succinctly, so there's not probably a lot more I could add here, except for, when we kind of look at the persona of the CFO and basically providing kind of end-to-end liquidity solutions, it includes TMS, it includes connectivity, but it also includes working capital, trade finance as well. So I think, kind of getting that message to market while we have all of the assets there is something that we're continuously working on. And obviously the role of how this plays into the integration world as well, right? Because in the middle of every, Kyriba implementation is an integrator, and figuring out and getting to know them really well and figuring out how we could add value to that whole process to benefit the customer is really, really important.
Right. So we've got a few minutes left. I'm going to actually do a little speed round exercise here. So maybe just in a couple.
We can't take questions, right?
We were going to hold off on questions.
Okay, got it.
So, but certainly afterwards, come up, approach any of us. I'm happy to address any questions that you have. But in terms of the speed round, hopefully we can have some fun with this just within a couple words. So what does partnership mean to you, just in 2 or 3 words? Gunita, we'll start with you.
Strongest go-to-market channel.
Great. Gil?
Dialogue, looking for the win-win, listening.
Great. And what does partnership mean to you in Kyriba?
Shared goals and trust.
Great. Love it. Good ones. Banks and fintechs, friend or foe?
Frenemy,
Frenemy.
but I think that's changing.
Awesome. Gunita?
I see them as friends. We're bringing our strongest suite to the table, so it's friendship.
Awesome.
Yeah, huge value, friends. I think it's incumbent on us to figure out how to work better with you all.
Both
Great.
sides, yeah.
Awesome. All right. Let's see. Importance of executive sponsorship in partnerships. Gil?
It's very important, but it's not everything. Sometimes our partners really want access to all the senior people and don't have anything to say, and it kind of drives us crazy. So when it becomes noise instead of signal, it's, when there's work to be done with executive sponsors, it's absolutely essential to get things moving. Anyway, that wasn't your 2-word answer.
That was a little more too, but
That's a tough one.
it's all good.
It's
Good
hugely
question.
important. Executive championship really helps.
Yeah.
Not to be a contrarian, I think it's hugely important. However, I think it can be like a little overused. Executive sponsorship's super important. You have to have it to basically get things done. But that executive also needs to have the right incentives to want to work with you as well, right? Mm-hmm. And so as long as the two are basically in harmony, then I think it's super important.
Great. I like this question. It's pretty simple, but it's helpful for those that are interested in partnering with banks or fintechs together. What's a reasonable timeline for return on investment in these partnerships?
It's a 1-word, 2-word, or
Yeah,
like
3 to 18
Like 6
months.
to 12 months. Right. How long was
I
that?
said 3 to 18 months.
3 to 18 months. Okay, great. Gunita?
I would agree with that. 3 to 18 months, only because is it a referral partnership? It's a resell, or is it a co-sell? Really varies.
All right.
Yeah, I'd say 3 to 18, 18 months, absolutely. You should hopefully get it done, otherwise you shouldn't be doing it. Right. But at the same time, I think there's a soft benefit that hits it around the 3-month mark as well. And while you may not fully have it completely baked, understanding where you're going and having your clients understand that is hugely valuable.
Great. Maybe just a quick round of applause for these guys. We're right at time. Thank you. I didn't look actually to see what's next. I'm assuming we've got a quick break, so my apologies if anyone else wants to step in, but I think we're right at break time. Would that be right, Peter? Great. All right. Well, build, connect, innovate. Don't forget. Thank you.